Welcome back, viewers. Today we will be testing the harmonic moving average. But before we do, if you have not watched our first video and the videos after that, you need to go do that now. At the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below. You can also find a link to sign up for TradingView down below. If you use the link below, you will save a little bit of money. You can also find a link below to join us on Discord. Discord is a free group communication platform. On our Discord server, we are having great conversations about all things regarding trading. One of the biggest struggles on this channel is people who use other platforms like MT4 being able to follow along. Sometimes it can be hard to find the indicators we are using on other platforms. And so on our Discord server, I have created a channel for indicator creation. And on that channel, I pinned links to freelancers who can code indicators for MT or for TradingView. So if you don't want to create a TradingView account, you can hire a freelancer for a really small fee and have them code an indicator for the MT platform. Or if you are on TradingView and need an indicator created, something unique or an indicator for a system you have developed, you can also have them code PineScript. So use the link for either MT4 coding or use the link for PineScript. Lastly, I get a lot of people that are asking me for the entire list of all the winning indicators that we have tested to date. And whereas I am not a big proponent of gatekeeping information, I've put a lot of time and effort into creating the content on my YouTube channel. And so I don't think it is too much to ask for the viewers to go through and view the content that I've spent a lot of time creating. Now, if you are not interested in supporting our channel by going back and watching the content that I have created, then I have developed a solution for you. I've created a Patreon account. I will put a link to it down below in the description. If you sign up for Patreon and you sign up for the $9 a month account, I will send you the full list of tested and winning indicators to date. I will also send you an updated list of the indicators that we are testing at the end of each week. Now, of course, you have to stay subscribed to the $9 subscription, monthly subscription, to continue to receive the updated list of indicators. But that way it will provide me with the support that I need to continue to provide the free content that I am putting out for everybody to view. Now, if you just love the channel in general and want to support us, then there is also a lower, I think $3 Patreon subscription that you can sign up for that will also help support the channel and keep things going so that way I can continue to produce the content and the open information that we are creating here in this channel and in our Discord server. Again, if you have not signed up for our Discord, then you need to do that as well. It is a absolutely free platform where we have real-time ability to chat and have conversations about trading. And again, if you want to support the channel with Patreon, then you can find the link down below in the description. Alright, as I said, today we will be testing the harmonic moving average. But before we do, I wanted to put the indicator scoreboard up for everyone to see. So, to date, we have tested 206 indicators. And out of those 206 indicators, 80 of them have been winners, which means that they have met or exceeded the 60% win-loss ratio threshold that we have set for them. The best ones so far were able to achieve a 100% win rate. Now, you need to go back and watch those videos to understand the context of how they were able to achieve that. But as we are working on building the best trading system possible, you could take any one of those 80 indicators and get out there and start potentially profitably trading the markets with them now. So go back and watch those videos, make a list of those indicators, and get out there and see what you can do with them. But stick with us here as we work on maximizing your trading profits. All right, so today's indicator is the Harmonic Moving Average. So a while back, we did a head-to-head challenge on moving averages, and we took just about any moving average that we could find, and we tested them one after another to see how well they could compare to each other. And during that testing process, we used basically the most common moving averages. And so we use your exponential moving average, whole moving average, smooth moving average, volume weighted moving average, and so on. And we found that the exponential moving average was the best moving average that we could use when trading just the moving average with price action. Now, of course, as we continue to work our way through more and more indicators, it only stands to reason that we are going to find more moving averages that we didn't necessarily know about or weren't, easily noticeable when we were doing the moving average tests. And so, obviously, as we come across more moving averages, we want to put those moving averages to the test as well to see how well they compare to the rest of the moving averages that we have tested, and just to see how well they compare to other indicators in general. And so today I ran across the harmonic moving average, which you can see on screen. Obviously, it's pretty simple. It's just a moving average, so just a single line. We will be testing it with price action like we did the other moving averages. And so what we are looking for is price action to break either below or above the moving average. And that will be a signal to go either long or go short. And so all in all, it's a pretty simple test that we're running. Nothing crazy, and nothing visually crazy with the indicator as well. What we are going to do is go ahead and map out some support and resistance areas. So we have basically what I'm going to do is I'm not going to go back beyond this big red candle that took place here. I'm just going to look at the most recent support and resistance areas. So like usual, we're going to map or mark off the highest points of support and resistance, the lowest points. And when you're mapping or marking off the top and the bottom, or the highest and the lowest, you typically are not concerned about multiple touches of that area. And so, for instance, here you can see on this bottom line that I've marked out the low of the price action here, and it only has one touch here in the most recent price action. And what we're doing is we are basically marking off our highs and our lows. And then we'll go back in and we will start marking off the points that have multiple touches and kind of zones of retracement and bounces of the price action. And so we start the lowest and the highest, or the highest and the lowest, whichever you want to look at, and then we work our way up from there. So from the bottom up, looks like this area right here had multiple touches of price action. It's a little early to tell what's going to happen here, but it definitely had some kind of reaction to this area. It didn't come down and just blow right through it. It came down and is now bouncing off this area. It may very well go down farther, or it may bounce and continue up. We're not sure yet because that price action obviously hasn't happened yet on the replay. But our concern is to find an area of obvious reaction, and that has taken place right here. So we'll consider that to be a valid area. Moving down from the top, let's go ahead and mark off. This is where it can get rather difficult sometimes to really decide, because remember again that these are zones. These aren't necessarily exact lines in the sand, exact lines where price is always going to come to the exact pip and never cross or never go below or above. So when you are marking off the support and resistance areas, sometimes you will find areas like this right here where it's a little uncertain, especially if you look at this top one right here, because price right here on this peak came up and got really close. But if we were to bring this down a little bit and kind of write it off the top of these, kind of ignore this because it spiked up here and then immediately dropped below, then you can see that now this becomes a touch, as well as this area, this area, this area. And if we brought it down even a little lower than that, then we have this also touches, this gets really close. And so again, this is kind of a zone, not an exact area. And so you don't want to get too detailed with marking off every single area that has it at least 2 touches. That's normally kind of the rule that you're looking for, is has price action had a reaction to that area at least twice. That's kind of what most people say, most traders say, at least 2 touches of the area. And so if you did that on every single little spot, then this would be just a crazy grid of lines that you wouldn't even be able to really see what's happening, let alone be able to look for any kind of reaction in that area. So it gets kind of ridiculous at a certain point. And so be mindful of that. You're kind of just getting close to areas, but it doesn't have to be exact touches really. Sometimes price will break through, come back. Sometimes it'll be just a wick. Sometimes it'll be bodies. So yeah, just kind of loosely marking off areas. And then you can kind of refine those as price action goes on. So this is one of the reasons why I have such a big issue with support and resistance areas like this, is that they can be very subjective at times. One person can look at this and say, well, it needs to be, only the bodies touching. And so you would have to adjust the area. And then some people would say, well, no, you go all the way to the end of the wicks. And, the wicks are the end of the zone. And, it goes on and on. Everybody has their own theory, their own idea of how support and resistance should be mapped out. And so that can cause, some areas where You think that price action might have some kind of reaction to it, but it, necessarily, it's kind of a useless area, more or less. And so you have to be cautious when doing that. Another good way of kind of marking out the support and resistance lines, you can use Fibonacci levels. And so what you can do is you can take a Fibonacci level like this, a Fibonacci retracement, you can draw it down, and you can mark as many areas as it has on here, and then use those as the individual lines. When you get this far out, though, those lines become extremely spread apart, and so they may not work quite as well. Or what you can do is you can do them off of small areas as well. And so if I wanted to do it off of this area here, and what I could do is draw a Fibonacci level like this. And I know it's kind of hard to see with these black lines already on there. Let's see if we can. And so at that point, what you would do is, and you can see that some of these lines get really close to the Fibonacci levels like this. And then you would actually want to go in and turn on as many of these levels as possible. You would just keep adding more and more levels to it, and then you would mark each level with a line. Like so. Those are kind of our standard ones right there. Once you have a grid pattern in place, you can then delete the Fibonacci retracement like so, and then turn on like so. And now you see that these areas line up really close to the price action that has reactions to that area. You can see that it's very close to the areas that we had marked off already on the chart. And so that tends to be a less biased way of marking out support and resistance areas, so you're not just guessing where those areas, those zones are. So all right, now that we went through that, didn't mean to wander down that road, but just kind of happens sometimes. Let's go ahead and get on with the testing process and see what we can get out of this indicator. Again, the harmonic moving average. Price action dropped down there really quick and then spiked up fast. That was quite a move that it just made right there. Definitely got our take profit. Let's see here. Looking for the vertical line. Crossed right there to the upside. Definitely getting us to our take profit. Let's see what's going on here. We get a cross to the downside here. Don't know if... Nope. We missed take profit on that one. This is a 30 period, is what I set the harmonic moving average to. It's the same period that we set all the other moving averages to when we were doing the other moving average tests as well. All right, so we get a jump to the upside right there. That one also does not work out for us very well. To the downside there. Again, no take profit. Cross to the upside. And again, no take profit. Down there. there, down there, and across up here, down there, down, wow, that thing just ran into a level of choppiness that just absolutely crazy. Let me go ahead and mark these out here. And then, boom, we finally get a take profit out of that. Quite interesting moving average that we have there. Looks like we pick up a short right here for just a moment before it spikes back up above right here. That one got us to take profit. That one took off rather nicely, shot right up and out. And you can see anytime you get a move that takes off with this much speed, this much momentum, comes up and then starts to roll over the top right here like this, is usually a pretty good sign that momentum is slowing down and a reversal is coming in pretty soon. It was above the highest point in recent price action, and so we really didn't have any kind of area or zone of support and resistance. We could say that it was overextended for sure. Might be really the only clue to the reversal that was obviously coming up. Now we see that price action has pushed its way down really hard, and what we're looking for is a sign of the momentum starting to weaken. Not yet, still going down. And there we go, we start to see some rollover and some movement to the upside. So right here it came down and just kind of chopped to the side for a while. We really didn't have a strong push back to the upside like we see here. See the strong push to the upside, but now we're running headlong right into this moving average, which might play some kind of role in it stalling out at that point. Looks like it did for a second. Yep, and hit it, came down, stalled out, started to push its way back down. Just ride it out here for a second. Pushed its way down, kind of curved up a second, bounced off of it again, and then really pushed its way to the downside. Now you can see we're down here at this lowest point, which actually if we marked off this point here, that point back here actually became the lowest point for a moment. But now you see that price action is starting to roll up. It bounced off this area again, rejected it with this big long red candle. It's now coming down, hitting this area, having a reaction. Now you see it's really starting to get uncertain at this point. You see price action is just kind of bouncing down, back up off the moving average, and then it just, you can see the uncertainty taking place in the candles. This is a pretty good sign that price action is wanting to go up, but at this point it's still kind of being held down by this moving average that's pushing it lower and lower. It's uncertain at this point. It may break up above it and take off, or it may break up for a second, drop down really fast, and then make its way even lower. And so you see that it breaks up above the moving average with this big green candle right here, and then it just spikes up and out. And so in this case, what you could have done is put a buy order right above the high of this candle, and as price action continued upward with this big green candle right here, you would have jumped in on it and taken a decent little trade to the upside there, and that would have all been kind of confirmed with price action coming down the way it was acting, the support and resistance areas, the break above the moving average, a lot of things all together confirming that that trade would have worked in your benefit. Alright, so I went ahead and jumped a little bit ahead, went ahead and hit the end of the year right here. Let's see. Let's go ahead and play this one out a little bit more. There we go. We picked up one more winning trade there. So yeah, there we have it. That is the harmonic moving average. So we can see there at the beginning of the year, it took a lot of losing trades really fast. And so this is kind of the downfall of a single line indicator, especially when dealing with price action. This, just kind of seems to be the Achilles heel when it comes to these kind of indicators. But let's go ahead and count them out just so that way everybody has the count. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, and 30. So we have 30 trades all together, and we have 1, 2, 3, 4, 5, 6, 7, 8. 8 winning trades. So obviously that is nowhere near the 60% that we needed out of this indicator. Again, anytime we have single line indicators that price action has to break either above or below as signals, anytime a choppy market starts to set in, really just beats the indicators really bad, beats them up really bad. And this one was no different. Some of the other moving averages tend to kind of stay out of the choppiness. Again, the exponential moving average was one of the best that we've tested so far. And then there were moments where, as trend was really good, this indicator did well. But in a choppy ranging market, it just got torn to pieces. So unfortunately, it's going to go on the no list, and we'll move on to the next indicator from here.
If you have not already, like this video, comment below, subscribe to the channel, and turn on the bell notification so that way you are notified anytime I post a new video. As part of the team, it's important that you are seeing the new videos as they come out so you know what it is that we are discussing and what indicators we are testing, have tested, and have not tested. Also, like usual, there is a link below in the description to the Discord server. You can join us on Discord so that way we can further discuss the indicators and have discussions as we move forward building our trading system. And lastly, like usual, there is a link below to TradingView. If you like what you see whenever I use TradingView and you are interested in signing up for TradingView, if you use the link below and sign up for a paid account, you will save a little bit of money. So, all right, everybody, I will see you on the next video.